1940 में ब्रिटिश इंडियन आर्मी की बलोच रेजिमेंट की 5वीं पलटन ज्वाइन की। हिंदुस्तानी सिपाहियों ने जापानीज का बहुत बहादुरी से मुकाबला किया और उन्हें जापानीज के हवाले कर दिया गया। हिंदुस्तान और अंग्रेजों के बीच एक धागा था, वो टूट गया। गद्दारी की कोई माफी नहीं होगी।
You are charged with Indian Army Act Section 41, waging war against the king.
जब अंग्रेजी अफसरों ने साडी हिफाजत नहीं की, तो वो हमारी वफादारी के हकदार किस तरह हो सकते हैं? अगर जिंदा बचा उसके बाद शादी करोगी मुझसे?
Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. Annual retail inflation eased in June to its lowest pace in more than 5 years as food prices fell, building pressure on the central bank to cut interest rate when it meets for a monetary policy review on the 2nd of August. The consumer price index rose 1.54% in the 12 months through June, down from an increase of 2.18% in the previous month and slower than the forecast of economists in a Reuters poll data released by the Ministry of Statistics showed on Wednesday. Economists in the poll had predicted inflation to ease to 1.7% last month. This is the lowest inflation rate since the government started releasing retail inflation data in January 2012 based on a combined CPI index for rural and urban consumers. In the first segment of Policy Watch today, we will analyze the latest inflation figures. Joining me on the program today are TK Arun, Editor, Opinion, The Economic Times, SP Sharma, Chief Economist, PhD Chamber. Thank you to both my guests for joining me on the program. TK Arun, I'd like to begin with you. Are you surprised at all at these inflation numbers, or do you think that they are, that this is what we expected at the end of the day?
Yes, inflation numbers have been coming down. See, the inflation number can vary sharply because the consumer price index has large weightage of food and fuel, which together account for more than 60% of the weight. And both these are fairly volatile entities. Food prices fell sharply following the disruption in your rural markets after demonetization. All the financial intermediation that happens in rural areas were disrupted, and this played havoc with food prices. And we had a very good harvest this year. So this glut, actually this is what is creating the farmer agitations, distress in rural areas. So the extremely low inflation we have today has as its counterpart the distress in the farm sector and the farmer suicides and the agitations across the country by farmers. So it's not a good thing. While we might say that lower inflation is something to celebrate, it is driven by steep fall in agriculture prices, which is not a particularly good thing for the farmers and their ability to purchase. When the farmers' income falls, their ability to purchase goods made by industry comes down.
Yes.
And that in turn will lower overall demand and then depress production. So it's not such a uniformly good thing. So the general conclusion, particularly the one highlighted by the Chief Economic Advisor, that there is a case for the RBI to proactively lower rates is warranted. I would only say a couple of things. Inflation numbers can change. Our inflation and the monetary policy that is based focused largely on inflation cannot be determined purely by domestic factors. We are, while not completely open, our cross-border movement of capital is controlled. Even then, we are a relatively open economy. On the current account, we are open. So, if the tensions that currently roil the Middle East, the ban on Qatar and all that, if that results in a spike in petroleum prices, that will immediately reflect in our import bill on the oil front.
Yes.
It will put strain on the balance of payments, and this can happen. Janet Yellen, the Fed chairman, has told the US representatives that be prepared for further increases in the policy rate in the US. This can result in some money draining away from emerging markets such as India.
So all this has to be factored
All this has to be factored in. So even then, I think on balance, there is a case for lowering the rates below 6.25 where they stand now.
Right, right. SP Sharma, when the MPC meets on August 2nd, which is not too far away from now, can we expect some kind of a lowering of rates? The Chief Economic Advisor, as TK Arun has rightly pointed out, has pulled up the RBI, and it's not named the RBI directly, but clearly a reference made that to the RBI, asking them to reduce the rates, so cut the rates.
Yes, industry is expecting low rates since long, because now fiscal deficit is also under control, and industry was expecting low rate at that juncture also. But due to demonetization, industry was very much in anticipation that now RBI is going to reduce the repo rate because of excess money in the system. But that has not happened. Again, on the anticipation of good monsoon, industry were expecting cut in the repo rate, but that has not happened. Lastly, RBI reduced the repo rate in October 2016. After the October 2016, there are a lot of developments in the economy, starting from demonetization and again implementation of GST and good monsoon and good policy environment and good developments in the international market scenario also. But policy rates are still high, which is a major demand by the industry sector. Now, our inflation rate is less than so many economies like US, Russia, Germany, Brazil. All the comparable economies are higher in inflation rate as compared with India at this juncture. But our policy rates are still very, very high as compared with those economies like USA, Germany, Japan, and even other emerging economies. So there is no threat of imported inflation also, because those economies are facing lower inflation, like less than 2%, almost all the economies. So there is no case of imported inflation in the coming times. So at this juncture, to boost up the rural demand and to boost up the overall economic growth, like now the inflation rate is in the negative trajectory in so many products. In the food inflation, is in the negative trajectory. So at this juncture, when the IIP numbers are also at 1.5 or 1.6%, so now we have to boost the demand scenario, particularly in the rural segment.
Right.
So at this juncture, policy cut in policy rate becomes inevitable to boost the economic growth and to refuel the economy.
So the pressure is on the MPC is what you're suggesting.
Industry is expecting a 25 basis point cut in the coming policy environment.
Okay.
Yes.
TK Arun, does the RBI or the MPC have enough elbow room to play with this kind of a scenario and decrease or cut the lending rate? And also another factor is, what is the biggest concern as far as the RBI is concerned?
The RBI's concern still is inflation. See, the RBI also is worried about the fiscal deficit, and historically, inflation rate in India has been highly correlated with the size of the fiscal deficit. Now, the centre has been maintaining fiscal discipline on a fairly rigorous basis ever since this government came to power. In fact, from 2013 onwards, our fiscal deficit has been coming down. Even from the last years of the UPA, the fiscal deficit has been gradually coming down. Now, the states have been playing their role in this process till this year. Now, the states are slipping up on fiscal discipline, especially after they were forced to take on the debt burden of the state electricity boards under the Ujjwal scheme. Their borrowings and their debt burden have gone up. Now, on top of this, state after state is waiving farm loans.
Yes.
This will also add to their fiscal burden. So, the combined fiscal deficit of the centre and the states goes up beyond what it was anticipated, what was targeted. Then there could be some excess demand pressure on the economy, and inflationary pressures might go up. This is one worry that the RBI and the Monetary Policy Committee have. And another is on the fallout of the 7th Pay Commission things. Now, that is not fully rolled out even now. Once that money is fully dispersed and the additional purchasing power that comes into the economy as a result of that articulates as a demand, there will again might be some slight upward revision.
Right.
When many commodities that did not bear any tax in the past now start paying tax following the introduction of GST, there will be a one-time bump in inflation again in July. So there could be a sudden uptick in inflation in the coming months. But even taking that into account, my sense is that the RBI has some leeway for cutting rates. But the main thing is industrial growth and investment are not constrained by borrowing costs.
Right.
Today, they are constrained by the lack of ability to invest on the part of the private sector. The bad debt problem of the banks, that is at the root of the economic slowdown that we are witnessing, as a result of which, as Mr. Sharma said, industrial growth is now trending way below where we would like to see that.
Sure. You know, industrial growth, like has been pointed out, is a major concern. I mean, at the same time, last year it was at 8%. Now it is hovering just above the 1.5% mark. And this is a cause for concern. What needs to be done as an immediate measure to try and rectify it?
Firstly, there must be cut in the policy repo rate. And second, ease of doing business for the MSMEs. Because now most of the growth is happening in the MSME sector. But MSME sectors is full of problems. Starting from the financial problem, then the ease of doing business, their compliance cost. So there must be a major policy focus on the MSME sector, considering their, firstly, the financial problems, because they are not able to get adequate finance from the banks. Banks are always in the demand of collaterals. That is a major problem for the MSMEs. So growth should start from the MSME sector in the industry segment. Now the growth is not factored in the MSME sector because of various reasons. Number one, IIP is not containing the data from the MSME sector. The data provided by IIP is only for the major corporate sector. That is the reflection. MSME reflection is only 35%,
right.
And the major data comes from the 65% is from the corporate sector. So IIP is not a true reflection of the industry growth rate. So if the MSMEs are considered in the growth factor, then I believe IIP will be in the higher trajectory from the current level. Second, ease of doing business. Now the major focus of the government is on the ease of doing business, but there must be a special focus on ease of doing business for the MSME sector. That will boost their growth trajectory, and that will create employment opportunities in the economy and overall economic growth in the economy.
Sure.
So that will happen only if the adequate credit is provided to the MSME sector and ease of doing business.
Okay, fair enough. You know, quick closing comments from both my guests. With you, we are beginning with you, Arun. First, do you believe that this inflationary trend is going to continue for some time?
The economy revives, the trend will be reversed, and as demand picks up, prices also pick up. And I think that will be a good thing, because farmers should not be in distress, consumers should not be in withdrawal, they should be entering the market and buying. Investment to take place on a more robust fashion. But investment is the key, and then for that the most important thing is to actually restructure your bad debt of the banks.
Okay.
If the bad debt problem is resolved, then investment will pick up.
That is the crux of the issue.
That is the crux of the economy.
Fair enough. You know, quick closing comment from you, SP Sharma. Close the show close the segment for us with your closing remarks.
Yes, I would suggest 2-3 points. Like inflation is not going to in the higher trajectory in the coming times. Inflation will remain within the 4% trajectory for the current financial year. I agree with Arun's comments. I believe inflation will rise in the coming times, but that should not be more than 4% in any case. So there is a good room to cut the policy rate to boost the industrial demand, to boost the industry growth rate, and to boost up the rural demand. That will give a big push to the overall economic growth in the coming times.
Right.
That is my connotation for
Okay, fine. On that note, then I'd like to thank both my guests, TK Arun and SP Sharma, for joining us on the program and putting things into perspective for us. It's time for a short break now. On the other side, we'll analyze the food retail market, which is looking to boom in the near future. Stay tuned. We'll be right back. Welcome back. You're watching Policy Watch with me, Frank Pereira. With the government approving Amazon's proposed $500 million investment in the sector, the floodgates of the food retail sector seem to have been thrown open. Most analysts believe that after e-commerce, the food retail sector is the next big thing. Currently, the government permits 100% foreign direct investment in the food processing sector. As per norms, a foreign company can open a wholly owned subsidiary in India to retail food products produced and or manufactured in the country by way of opening stores or online. The government had received investment proposals from 3 companies, Amazon, Grofers and Big Basket, worth $695 million for retail of food products. While US-based retail giant Amazon is one of the major e-commerce players in India, Grofers and Big Basket are the other players in the online grocery space. In our next segment, we will analyze the food retail market in India. Joining me on the program right now are Tajamul Haq, former Chairman, Commission for Agricultural Cost and Prices, and Harveer Singh, Editor, Outlook Hindi. Thank you to both my guests for joining me on this edition of Policy Watch. Mr. Haq, I'd like to begin with you first. Of course, do you believe that the next big battle is going to be in this particular sector, especially with the government approving this $500 million deal for Amazon?
We should not call it a battle. I think, according to many economists, I think this creates a new hope for many people, particularly in the rural sector. Now that the traditional agriculture does not give, kind of much hope for the farmers, no remuneration, nothing like that. So now a lot of people feel that at least a lot of younger generation now should come into the field of food processing. And now you also have seen that under the Make in India program, food processing is one of the priority areas for development. So based on both domestic players and also foreign players. So FDI is coming, a lot of local entrepreneurships also will come. And the big question is that whether the farmers can directly have some participation in
can they benefit directly from this?
So this is the major question which needs to be addressed by the farmers and how we do it. But certainly in terms of infrastructure wise, the government says we have created some basic infrastructure, particularly when they talk of bigger national park in which some small plots will be given to these players on long-term lease basis with all other concessions and basic facilities. So I think a lot of people hopefully will come, both foreign and domestic, and that will create a lot of employment opportunities in India, which is the main objective of our Make in India program. So hopefully this will help.
Okay. Harveer Singh, what can we expect in the days to come? As far as agriculture and farmers are concerned, one of the biggest problems is that, the middleman makes the most money and the farmer doesn't get anything. So with this, do you believe that the farmer stands to benefit because these companies' procurement process will be very different?
Yes, you are right that the main objective is to make farmer more to get better price through more competitors are coming to buy their produce. And if a company like Amazon, which is the giant, such a big company worldwide, and shows its interest into this business, and basically it is just food retail only thing government has allowed, and we have already 2 small players. So maybe they are the big player in the country, but
at the moment,
the moment, because there is not a big player, and this segment is completely, I can say, virgin if you leave it. And that our society is also changing. We are entering in a different society now. More and more young couples both are working, and they depends on a lot of things through online shopping and all. And this is a category which
times are changing, basically.
And because initially, what is my thinking? Initially, they will be able to cater only this upwardly mobile section of the society, because only they can buy online this produce. At the same time, but one important aspect with this development is that these companies can open brick and mortar store also, but only for food. Although food business, there are thinking that food has just thin margin. No, it has a very big margin if you see, because the farm gate price and your at the top of the table when you are eating a food item. So if you see the difference, there is a huge difference in multiple, not only just incremental in percentage, but twice or thrice, sometimes 4 times price consumer is paying compared to the farmer is getting. In this case, if companies are going direct to the farmer, or they create some aggregator at the farm gate level and then sell these produce to the consumer online, at the same time it will save the infrastructure cost to create a big chain country in big markets and all big cities. So because it is from their warehouses, produce will go direct to the consumer.
Right.
This is the basically this is the I think strategy, or this is the model in online business model in online we have. But we have to see, it's a new thing is coming. But when the biggest player of the world is entering to this field, definitely you will find a sea change.
Yes, you will find a sea change. But you know, Mr. Haq, is this the government's answer to all that's been happening as far as the farmers' protest is concerned?
No, I don't think so. Farmers will not take it so easily for two reasons. First of all, I think you must create an institutional mechanism by way of which the farmers will directly benefit from this kind of development. FDI or domestic players, whosoever come in this sector, this is good in the sense you need investment, you need employment to be created. And once this is done, because there is need, as I said, currently the processing sector plays a very small role in the country. And there is need for more and more things to be processed, which will create value addition and also have some kind of employment opportunities.
Countries like Brazil are producing far more, processing far more than us and reaping the benefits of it.
But even China, China produces much more, that we process much more than what we do. But you must create, as I said, a mechanism like small and marginal farmers cannot even think of primary level processing at the local level. If there is some kind of linkage between these companies and the small farm producers and in a group, not necessarily individually, probably things may change, because these people will do some kind of primary processing at the local level. They will again sell it to some big players, and then which ultimately is sold by these again bigger players. So like that, if this kind of chain is created in the system, then only the farmers benefit.
Sure.
So unless the farmers are enabled to benefit from the supply chain, it is again a business for big people, and farmers don't get anything, no matter whatever you do. So this has to be ensured if you really want to address the problem of farmers' agitations and farm distress.
Okay. You know, as far as the sector itself is concerned, Harveer Singh, how is the food retail sector doing in India? And you know, what kind of and how does it look? I mean, is it a bright spot? Is it something that, you know, where we can expect new entrants to come as well? And is the field going to be an open playing field?
Actually, if you see, food retail has not actually, we don't have very good examples of success in this field. One retail chain started called Sobiksha earlier, but it got bust actually after some time. But because food is a very, very limited stuff, if someone is going to buy some grocery items and food daily need requirements, so he will not just buy food, he buys a lot of things. That's why all these, if you see the retail chains in the country, they have a lot of things to basically offering a lot of things, clothing, grocery, fruit and vegetables, and other household items. In this case, only food retail will be a little bit a bottleneck. But one point is here is very important. We are trying hard since last many years to bring more and more investment. In fact, already we have 100% FDI in food processing, but that was not coming. I think this can open the gate for that, because if anybody is coming to your country to process the food, if he or she, that company doesn't have any window or outlet to sell their produce on their own, so it was difficult. Now on that I think side, this chain is going to be complete. They can buy, they can process, they can sell directly. And gradually, because these cities are I think getting more and more population, and highly upward mobile population is also increasing, and people are becoming used to buy ready stuff. So we have a lot of gap between this food processing. Till we will not our percentage of the produce to get processed, farmer will not get the right price for their produce. At the same time, ultimately government maybe the intention is that farmer should get better price, because a lot of pressure, farming is completely under distress and a lot of agitations are there. And as Dr. Haq has a lot of data about this, just income of a farmer is just few thousand, around 6,000 or 8,000 per family. It's a very meager amount.
Average is just 3,000.
Just in some areas, it's 3,000 also. So in that case, even a small producer can get benefit out of it, but it will depend how we are going to implement it. And at the same time, there must be a regulatory mechanism for particularly at the level of purchasing from the farmers.
Okay, fair enough. You know, Just to take the discussion forward, Mr. Huck, we in India have this whole thing of touch and feel. We like to touch our groceries, our vegetables and everything else. So at a time like this, do you believe that it's going to be easy to make a shift to something that you do not see and just look at the pictures and order something online? And what happens then to our kirana stores and our sabzi mandis?
It depends basically, like if initially there will be some kind of trust deficit, but once it takes off and once suppose you get a quality product that way at your home without any problem, then I think people will develop that trust and things will move faster. And it happens in case of many commodities, I find. But of course, in the case of food, particularly fruits, vegetables and things like that, if it happens and the quality is not good, people lose the trust or faith that way, and then the business can suffer. I have seen this even in the case of Big Bazaar.
Yes.
Here in Delhi itself, you go, sometimes the quality is so bad that I will not let us like to go to Big Bazaar to buy vegetables. I will like to prefer to go to some mandis in the neighborhood anywhere, whether local mandi or anywhere where you get fresh good materials. So that will be there. But in that case, normally people say some of these big players normally try to ensure that quality is maintained. Otherwise, they know they will lose the business, particularly in a country like India, where people still believe things should be as fresh as possible.
Yes.
So I think that constraint will be there, but still, hopefully, things will take off.
A quick closing comment from you, Harveer Singh, about what's likely to happen in the days to come, and also my question about the kirana stores and the sabzi mandis. Do they incur losses? Is that something that they need to be worried about now?
I think on sabzi mandi front, nothing will going to happen to sabzi mandi. And in case of kirana store, because just food, only food, but at the same time, as you already mentioned, that whether people will believe buying this stuff from online without seeing and touch and feel, and that, because these companies will be allowed to open some brick and mortar store also, only, but they will sell only food items. So I think these two experience together, one can make believe that we are selling a good produce, but definitely a change is going to happen, and it is good for farmer, it is good for consumer, and not good for the middleman who is getting away with big money without doing any big thing.
And that's good to hear for the consumer as well.
Yes.
On that note, we'll call it a wrap on this edition of Policy Watch. I'd like to thank my guests on this segment, Tajamul Huq and Harveer Singh, for joining me on the program and putting things into perspective for us. That's all the time we have today. See you again next time.